Why do recent SEC changes to the Jobs Act have D&O underwriters so concerned? Ty Sagalow, president of the Innovation Insurance Group, explains in this edition of What's New in Insurance on RIN TV.
On March 25, 2015, the Securities and Exchange Commission passed regulations pursuant to Title IV of the Jobs Act, much to the delight of the small business community and to the concern of the private company D&O underwriting community. Now, if you don't remember what the Jobs Act is, you can be forgiven. It goes back to 2012. More specifically, on April 5th, 2012, Congress passed the Jumpstart Our Business Startup Act, the Jobs Act. Now, the theory of the Jobs Act was to make it easier for companies to raise capital and raise funds without that nasty oversight of the Securities and Exchange Commission and all those, filings that are required. As you might imagine, this developed concern in the privately held D&O insurance community, where their profitability of the privately held D&O policy was already under attack due to increasing coverage over the last few years, accompanied by increasing losses. Among those folks less than thrilled about what Congress did was the Enforcement Division of the Securities and Exchange Commission. And so, as any good regulator does when they're unhappy with Congress, they do nothing. Specifically, the implementation regulations, deadlines passed and passed and passed, with the SEC simply not getting around to publishing any proposed implementation regulations. Well, years go by, and of course, the privately held D&O market forgets about the Jobs Act and goes on to other things. Well, all good things must come to an end, and in this case, that means the SEC doing nothing has come to an end. The result was passive of regulations pursuant to Title IV. Now, Title IV is called the Small Company Capital Formation title. This is to be contrasted with Title III, which is actually crowdfunding. Now, just as an aside, Title III crowdfunding allows folks to raise $1 million with virtually no SEC oversight through portals without using security brokers and soliciting, the pizza guy. Those regulations has still not been issued over 700 days after the deadline. Well, they're supposed to happen by October 2015. That's another story. Today's story, though, is Title IV. Now, without getting too geeky here, in the good old days, privately held companies essentially raised money through something called Regulation D that allowed you to raise up to $50 million in a private placement memorandum. Privately held D&O insurers became comfortable with this because there was actually a lot of work to do a private placement memorandum. You had to only solicit accredited investors, those are people who are supposedly fairly rich and fairly smart, and there was a great deal of SEC oversight and lawyers and accountants. So the privately held D&O market became quite comfortable with private placement memorandums, and they were routinely covered, hopefully sometimes with underwriting, by your privately held D&O policy. Now, the other way of raising capital was Regulation A. Now, Regulation A had less oversight and less paperwork, but you could only raise $5 million. So essentially, nobody did it. Everybody did Regulation D, and all was happy with the world. Now comes March 2015, and a new regulation called A+, which increases the amount that you could raise under a Regulation A offering from $5 million to $50 million, with much less oversight in most people's minds than Regulation D. This, together with the lifting of a general solicitation ban, which means you can put in ads in the New York Times to your local pizzeria asking for money for your new company, has gotten smart privately held D&O underwriters worried. And I would expect, or at least I would hope, that the D&O underwriters are back in their rooms trying to figure out what to do with their D&O insurance policy in terms of amendments and potential additional exclusions. One day there will be a lot of losses coming out of this new Regulation A+. And when that happens, your humble correspondent will be here to discuss them and analyze them with you. In the meantime, and until next time, this is Ty Sagalow with What's New in Insurance.
For more world risk and insurance news, visit the RIN TV On Demand Library.